To all our clientele and first and mostly to our dear guest. Very good to see you, Christoper. Welcome back. It's been a little while since last time that we spoke. Very good that you make a chance to chat with us. How you doing?
Very good. Thank you a lot, Antonio, for the invitation.
Anytime. So with you usually, Christoper, we talk about global macro, what's going on in the market. A lot is going on in the market. Even more from last time there was quite a few months ago that we spoke. Markets are so volatile, so many risks that we have to mitigate. Why don't we begin in a sort of update? Put the situation for us on the macro side. We saw somehow some sort of resiliences in the markets, no? Of course, depends which continent, which geography we are talking more or less. But no, usually we talk about the US and Europe. So if you can reassess for us those two main markets, we have a very strong renewed energy shock caused by predominantly the Middle East war right now. Before it was actually a few years ago, we were talking about once again on energy shock for another war, the Russian-Ukrainian war, geopolitical risk, as I mentioned you, the global growth somehow has held up better. What are actually your thoughts?
Well, the first thing is I am quite optimistic regarding the energy crisis. Of course, at the moment we are talking, there are still a lot of tension between the US and Iran. We see oil prices are increasing quite sharply. But I would say we are not in the same situation than in 2022 when Russia invaded Ukraine. We see that most of the large economies are quite resilient. Inflation remains a little bit high, but in many countries it starts to get lower. We have seen it recently in the US, typically. In the Eurozone as well, we see that it's not so high. So we are not in the same situation. Does not mean it does not matter in terms of macro or markets, but what I think we should not overlook at it. And I guess most of investors, especially institutional investors, they consider that it will not have a very sharp impact on the market, and I kind of agree with them. Perhaps there are some questions regarding the Fed monetary policy, but it's only in the very short term. If we look at, let's say, the next 6 or 9 months in macro, I think the economy will still be in very good shape. In some economies, we could even see an acceleration of economic activity. My bet for the US typically. But I don't see inflation being the main issue, let's say, at the beginning of next year. So that's why that's already the positive thing. In many economies, demand is resilient, investment as well. We see it very, very well in the US, but even in the Eurozone, you may know that I'm often less optimistic about the European Union economies, but we see that in the corporate investment is increasing a little bit, so it's something positive. In terms of markets, well, you know, we are talking in July, so there are always a lot of volatility in July. It's something that always happens. One day the market is a little bit freaked out about the geopolitical situation. The next day it's about the semiconductors with South Korea. But broadly, frankly speaking, we had a very strong and positive performance in equity from the beginning of this year. If you wanted to invest anywhere, I would say you could have very strong return in emerging market, in developed market, even in small and mid cap in the US, very strong return, something I did not expect, I have to say, for a small and mid cap. So it's pretty much a very positive environment for investors. And I think for the second part of the year, it will last on the positive trend. I'm not worried so much about what is happening with the semiconductors. I think it makes sense. We had such a strong increase in like 6 months. It's completely normal that the market is going into a correction in a bearish market for a short while. We have also a lot of leverage on the semiconductors, so it increases a little bit more the drawdown. But broadly, I mean, I think 2026 is quite a positive year, I would say, for macroeconomic situation and especially for investors. So I remain quite optimistic.
Interesting indeed. I mean, very good. The optimistic side. You mentioned that you are not so much concerned right now regarding the energy shock. Can you elaborate a little bit the reason behind that? Why you think we are in a better situation from 4 years ago, 3 years ago, 3.5 years ago? When we had the shock of the Ukraine, the Russian war, and also you mentioned about on the U.S. side, of course, the resiliency on the market. I guess probably because their supply demand, their supply on the energy is huge, so they don't really need that much supply from this side of the world. Can you give me a little bit more of highlights?
Yeah. I think on the negative side, I will start on the negative side for the energy market. We know very well that oil stocks are quite low. I think in the US, they are at the lowest in the past 45 years. So, of course, it's something we need to keep in mind. But at the same time, some countries have still a lot of reserves, especially China. What has done China over the past 2-3 months is basically they lower their demand of of oil, and they took from their reserves. So that's why the market was pretty much balanced. That's why also we haven't seen oil prices jump, I don't know, to $200, $250, as some analysts feared. We are entering in a new period where, of course, we need still a lot of energy, and we know that very well in the summer and in the winter it will happen as well. But when we look at the oil market, a lot of countries that were dependent from the Strait of Hormuz in terms of export, I'm thinking about Saudi Arabia typically, they managed to find alternative routes. And I think this is something, and quite fast actually. I remember quite well when the blockade happened in end of February, March. Saudi Arabia announced they will find an alternative route, which is their pipeline that goes from the east to the west. And everyone was very skeptical because they say it will take probably years before it becomes fully operational. So as a matter of fact, what has happened, they managed quite fast to make it operational. I think in like three months, it was fully operational, and we have like 7-10 million barrels per day that goes through this pipeline. So what we need to keep in mind is in a period of globalization, perhaps some supply chain are more fragile, can be weakened quite easily. But also on the positive side, in globalization, you can find much more easily alternative routes. And this is what has happened with the energy market. So that's why it's not the end of the day. Like I think we are close to $90 per barrel in the last few days. It's high, but frankly speaking, it's not the end of the day. It creates a little bit of inflation, nothing very crazy. It's not so bad for demand. I mean, we consider, depending on the economy, that the equilibrium for the barrel is between $60 to $80. So 90 is not the end of the day. So that's why I think we need to understand the strong factor nowadays is there are alternative routes and they are fully operational for the energy market.
Got it. And now let's assess this situation for the European market. You mentioned somehow it's resilient, but we saw also that if we compare it with the United States, it's catching up, right? Overall. Yeah. Then when we talk about Europe, of course, we have to talk about Germany. Germany market, it's try to execute the reform strategy. Looks like that still it's a work in progress. Somehow Merz, the chancellor, rates are very low. Also in your country, in France, the situation it's pretty tricky. Now the looms backs of the far right coalition, the far right actually party to the new presidential election is there. Can you give an idea about how actually resilient is the European market so far?
Well, I think for the European Union, we are facing basically an economic stagnation. So it means we are not in a recession. It's not the end of the day. It's not dramatic. You don't have a lot of layoff. But when you are around, I don't know, 1.5% economic activity, obviously, it's not enough. I think if we want to increase wealth, to be able to have all this redistribution, the European model, and so on, you need to have economic activity at least at 2% and beyond 2%. You mentioned it rightly. For Germany, it's quite disappointing. We know it takes always a lot of time before we implement a stimulus plan. Let's just remember they announced a massive stimulus plan in February 2025. The first investment were in December 2025, like almost 1 year after. So it means that basically to see it in terms of economic activity, it might be hopefully next year only. My forecast, and only depending if they keep investing, obviously, my forecast is that Germany could try to reach 1.5, 2% economic activity next year. So it's good, but it's not like crazy given that they put on the table 1 billion euros, which is massive. For France, I think I have no. I'm sometimes trying to be optimistic for France, but frankly speaking, I don't see what can happen positively. There will be the presidential election next year. So all the candidates are starting to talk about what they might do if they are elected. The left, the far left, the right, the far right, there is none of them that really understand that you need to cut spending. France cannot live the same way that it used to live over the past 20 years. Public deficit, public debt, they are way too high. We don't have economic activity, which is a nonsense. I mean, I would say if you have a lot of debt, the government invests a lot and so on, but if at the end of the day you can have a strong economic activity, why not, I would say. But you have the worst of both worlds. You have too much debt, you don't have barely economic activity. When you look at Q1 economic activity, everything is going down. Investment, consumption, the only positive thing is public investment. So that was the only thing that was supporting economic activity from in Q1. I mean, it starts to look a lot like a communist country, because you have very high level of taxation, and they are talking obviously to increase taxation much more. I will just give you one figure. According to Eurostat, in France, you have 341 different taxation. The second one in the European Union is Denmark, and they have only 160. And for the rest of the European Union, it's most of the time around 80 different taxes. So it really shows that at the end of the day, it's like a completely crazy situation. It's what I say, it's like communist country at the end of the day. And I'm not very radical. What I mean is, even when you see like, let's say, center-right candidates, I mean, in most of the countries, they will be almost left or far left when they talk about economy. So I'm very pessimistic for France, and the market is also pessimistic. We see that the bond market, I haven't watched this morning, but a few days ago, the 10-year bond yield on the government bond for France was close to 4%. It keeps increasing steadily. I know for other countries in the European Union, it's also increasing, but the real issue remains France. So frankly speaking, I don't know we can get out from this situation easily. And you are based in the UK. In the UK in the 70s, we all remember it was quite tough in the 70s. I think France is exactly in the same situation. You don't have a government that is ready to do anything so far, and I mean the country is getting much poorer.
Got it. And Christoper, yesterday, so on the United Kingdom side, I would like your your highlights. Yesterday we had probably the 6th of the 7th prime minister in 10 years, so huge changes, huge movement in the market from left to right, and now we are back with this new prime minister. The situation in UK also is not very let's say gloomy or positive. It's stable, but it's not very optimistic. What's your view on this new prime minister, for example, for of course for the market side, for the economy side?
Well, I would say we will see what he will announce. He's facing a very tough situation. The new chancellor is someone that looks pragmatic. So let's say what he will do. I guess they won't have any other option than increasing taxation a little. But at the same time, they should not take the French way, which means you increase taxation, but at the same time, you don't cut spending. So they really need to cut spending. I think over the past 3-4 years, the market has sent a lot of warnings to the UK, not only when Prime Minister Truss was in the office, but also afterwards. So at one point, we need to take it very seriously. And the thing is that the UK is not belonging to the Eurozone. So there is no, like the ECB, in the Eurozone, the ECB is ready to step in each time. I don't think the Bank of England will do the same. So they really need to understand it as a cost. And when you look at the cost of capital in the UK, and the cost of public debt is increasing a lot. So they will, my view is that France and the UK are more or less in the same fiscal situation, but the only 2 European countries that really need to implement some kind of austerity, which means that you lower very sharply public spending and you let the private sector taking back on some things. You also need to lower taxation, because at the end of the day, higher taxation, less economic activity you have. So let's see if they will take this road. I will be more optimistic in the long run for the UK than for France, because if the new government is not implementing some kind of austerity, the market will force them to do that. For France, they won't force France, because at the end of the day, they know there is the ECB that can backfire. So that's more tricky. But I think in October, November, when the budget will be discussed in the UK, it will be quite challenging, and we may have a lot of volatility, especially in the sterling.
Got it. Christoper, for the last couple of minutes that we have left, overall looks that the European Union is much more cooperative, I would say, between the 27, 26 countries. US had been presented as well, continue to be, I'm the sheriff in town. So I'm the boss, so I'm too strong, and so on. In your opinion, going forward, who will be the winner in terms of attractiveness of investments? Because this is actually, okay, you have your own taxes, so you have your funds that you can invest, but you have also attract other players to come in. So what's your view on this?
I think for listed companies, for the stock market, my bet remains the United States. I have no doubt about it. It does not mean that there are no investment opportunities in Europe. In listed companies, I will keep looking at the banking sector. I will keep looking at some real estate sectors, especially more in Spain or in Italy. And I'm still optimistic, and I see a lot of foreign investment in private equity. But you need to be much more selective for the European companies than for the US, especially because in terms of value creation, you need to have this AI component. I mean, we all know you can debate about valuation, everything, who's gonna be the winner, which kind of company, but we know the next step is AI, and we don't have very large AI companies in Europe. So that's why I will not look at technological sector in Europe, or perhaps in the private equity field. But for listed companies, I will remain very, very basic investment. I will say especially banking. I think there are still opportunities, even energy as well, fossil energy, but we also invest in green energy, but much more selective. At the end of the day, if you are like a retail investor, you want to buy an ETF, I will buy an ETF in the US, not based on the European stock.
Got it. So at the end of the day, the big themes continue to be energy transition, technology, AI, what is linked to that, and so on. Definitely. Christoper, it was very good as usual to have you here with us. I really appreciate the time that you spent with us. And I wish you a good break, because we are very close to the summer break, and I'm already looking forward to our next chat in the autumn side.
You too. Have a very nice summer, Antonio.
Thank you. Thank you very much.
Thank you. Bye-bye. Bye.